Well, this is going to be a very important big trading update for you today, as we are potentially forming a very bullish failed auction of the overall range low. More to come in this video, of course, as we have now also finally filled that 10th of October massive wick that we saw to the downside. That is now filled on Bybit and across other exchanges. And simultaneously, we have seen taken out now the big psychological $100,000 level. So we have got a lot to cover in this video, a lot to update since my previous video. And yeah, without further said or do, let's jump into what we're all here for. That is the trades, that is the love of the charts and what we are looking for next. So look at this. As you know, in my last video, I was very bearish. We were obviously trading still within the range. And I had this perspective of I'm happy to short each and every single rally that comes. Why? Because I have very high confidence and probabilities that lower prices will ultimately come. Well, it didn't take long, to be honest, and those lower prices have came. We have taken out $100,000. We have hit the wick that was formed on the 10th of October. That has now been filled. And we are attempting, of course, right now to form a failed auction of the overall range low, which is a bullish setup. So on the grand scheme of things, the bias to be bearish, waiting for lower, was correct. Lower prices did come, and now it's actually opened up into some long trade setups. Before anybody starts saying, oh, Daniel, you were very bearish a week ago. How can you be saying that there's a long trade setup today? Well, that's the thing, right? We're bearish, waiting for lower. Lower prices, lower targets get hit. New data, bullish setups form, and thus you can trade those setups, right? It's like we were waiting for. We just wanted to see, really, ideally, that $100,000 taken out. That $100,000 has been taken out. So, of course, you got to then understand that's targets being hit, or then that you look for long trades, right? And so on top of that, there's a few things I'd like to cover here very, very, very quickly, because I've actually seen a pattern here, which is a special one, so I want to cover that. But I just want to share really briefly with you all this CCV 2.0, because a lot of people are unaware of this, and this is just to bring some attention to it. Of course, very popular pattern is the normal CCV setup, which is known as, you know, by the majority, the 80% rule. So there's this trade, if you're into volume profile trading, there's an 80% rule, right? When you open outside of previous day value, you look for that 80%, you know, there's an 80% chance of it rotating from the previous day value area low, for example, back to the previous day value area high. It's a very common and well-known setup. But this is the thing, you know, this was an 80% rule a long time ago, 80% probability a long time ago, right? This probability dropped down to around 20%. It was a truly awful trade setup. So that's where the CCV 2.0. So if you are a trader that trades off of that 80% setup, you know, which is the previous day value area rotations, you've probably been losing so many trades. And this is what I truly mean. Like in trading, it's about, you know, you can counter trading the majority. It's about knowing what the majority of the world expect and going against the herd. So when something becomes overly popular, and we're talking about used by millions of people, you know, there's a very high chance that it's going to stop working when it gets so popular. And, you know, you can look to, you know, counter trade then what the majority of the world are thinking. And that kind of, well, there's a lot that I could expand upon this topic. But anyway, just to make it really simple for you all, basically that's where the CCV 2.0 was born. And this is a setup that you had, this would have been on Friday. So you can see you open outside a value area. There's your daily open. There is your acceptance into the previous day value area low. A lot of people here would be longing for that 80% probability of the rotation to value area high. But what happens is you get that fake out first, and then you actually come to the target. This all fits within that, as we've been talking about, that CCV 2.0 and how the original 80% setup really does suck, and you want to be trading the newer 2.0. And if you want to learn about the CCV 2.0 strategy, then of course on our website, you just need to come over here, type in CCV, and you're going to go straight into the CCV 2.0 setup, which is an absolute improved version of that original 80% setup. But yes, with that said, that's how you can learn about it if you want more details. But yeah, just to say, there's been a few different lower term time frame opportunities. I want to focus on, you know, the higher term time frame potential failed auction that we are actually forming now. So first of all, what is a failed auction? It's where you come down below the overall range low, you spend some time below that low, take out $100,000, get the reclaim of the previous range low, and that activates what's known as a failed auction setup, right? The swing failure pattern as we saw at the high, quick up, back down, simple short trade. We obviously got a full rotation from range high to range low. And now at the range low, instead of a simple swing failure pattern, we have formed, as I've said, the failed auction setup, which is from that original range low. Of course, there has been, you could say, a little bit choppy, but nevertheless, it has not invalidated any setup yet. And that is as you get back into the range here, if we take off the magnet tool, as you get back into the range, invalidation is below the low. So your simple stop loss below this low, because that's the invalidation of the failed auction. Just as when you're trading a swing failure pattern, you short here, stop loss above the high, failed auction, entry is back into the range, stop loss below the low. And officially the target is the other side of that range. And so we've simply gone successfully from the range high down to the range low. And if this setup is to play out, it goes from range low back up to range high. But, you know, of course, this is a valid setup that is already activated. In terms of something that I've noticed here, which I think is really, really, really key, is a few things that I want to share with you all. First of all, we can say the standard, well, again, we're seeing a rise on a Sunday here today, right? Sunday, we're up over 1% to the upside. You know, generally speaking, we all know what this is going to mean. It's going to mean there's a high probability of the rises on the weekend get your reversals, towards Tuesday next week. So there is this very common play that we've been seeing. So you got to be a bit cautious of the weekend rises. But there's another pattern which is on top of that, which I find very interesting here. And that is when you zoom in here locally, right? When you zoom in here locally, what does this look like? Again, it's not picture perfect. It's not picture perfect, but it looks very similar to what I class as a ascending triangle. So we've kind of got this old support then resistance trend line. And again, this is definitely not perfect, but you can see you've built a low, a higher low. So you can kind of put in and understand, well, we've got a series of a low, a higher low, well, clearly a higher low here. So we could put form here, doesn't necessarily have to be today, but over the next few days, we can have this ascending triangle as well, right? And it's very obvious what we can be saying here is we have to hold the higher low, and another higher low. And this flat resistance, the more times it's tested, the weaker it gets. So this is a midterm pattern that I would be aware of. And what I would actually say is something very helpful, I hope here. It's helpful for me, I'll just say that, is when you view this then as the ascending triangle, perfect. But what else can you view it as? Range high, range low. And what does that give you? Much like we were trading for the past, nearly month, an overall range. What happened in the last time we'd done this overall range? It faked out the range high and what? Came back down to the range low. And so when you compare this lower term time frame price action to the higher term time frame price action, what happened last time? Well, very, very, very similar to what's happening here. We put in our, flat resistance with the fake out. We put in a very strange looking higher low, okay, with that trend line, of course. And you never got the full retest here until it broke. But the main thing that I want to be pointing out here is the fact that last time you formed this similar-ish pattern. Okay, similar-ish pattern. The last time we broke to the upside here with that swing failure pattern above $116,000 overall range high, and you got the fake out. So I just think it's something to be aware of. If we are to form this pattern, of course, the fake out again, and back down, just like we formed here to form there. That's just something that me personally, I'm very, very, very aware of, okay? So, of course, that activates more of a lower term time frame short trade. It does even activate you a potential position where you can be in a long from the failed auction and then also shorting from the high, right? There's several different ways that you can approach that trade setup. But for me, yeah, that's a very, very key level. Of course, if you start to get the reclaim of $105,000, well, that of course would invalidate that type of swing failure pattern, and then you can be looking for this to get a much more significant rise to the upside. So I just felt that was really key to really bring your attention to the, of course, activation of the failed auction, but I wouldn't get carried away yet. Let's say there's still a lot of weakness in this chart. You have nothing's ever going to be picture perfect, but similar type of scenario to what we saw over the past few weeks within this range. Of course, when you put in the high, lower high, fake out, high, lower high, well, we either get one of two things, right? And this is why what we're going to do is right click and have our alert set. We will either get a fake out, back down, or we can start to see that reclaim continuation. And I will always say, as a trader, we need to be aware of both of those scenarios, because what we need to do is just have that alert like we've just done, have the alert set, and then be patient, ready and waiting. Do we get the fake out? Well, then it activates a short trade, or do we simply get the strong breakout with no fake out, and then continuation, let's say towards $107,000, right? It's not a guessing game. It's a real simple plan of make that plan, have the alert set, and then remain patient to see the outcome, right? You are trading the live data in front of you, right? So it's all well and good, making the prediction or being aware of the scenarios, but you trade what actually happens, right? You actually trade the data that you get. So that's why, personally, I think this is the best style of trading, period. Like, provides a very good win rate. So, that's really my viewpoint there. I just want to cover three very, very, very quick little posts here. Number one is, if you saw our video from Igor, which was posted last week, which was single prints versus the ICT fair value gaps, we have now actually created a free cheat sheet. This is available to absolutely everybody watching this video. You can get the link via our Twitter, or maybe I'll leave it down in the description. You just click on this little link here. That will bring you to this, where you can just continue to destination. And with just your email address, you can sign up and get that cheat sheet that was made for the single prints and fair value gaps. So just wanted to bring your attention to that, the free cheat sheet. Second of all, we had a lot of people asking, if you miss a live stream, can you watch it back? This guy's from Australia. And I say, absolutely yes, whether you're in Alaska, Australia, or Austria. Chart Champions is obviously a worldwide community. We have people absolutely everywhere. You name it, we probably have someone from that country. And so, if you ever miss a stream, you can watch it back anytime on demand, just like Netflix. So if you're busy one day, it's easy to catch up whenever suits you. That's our Netflix style library, but instead of wasting your time, you're actually learning. So it's, let's say a much bigger upgrade on Netflix. And the last thing that I want to do here is just say, shout out to Don, who has secured his, I love this top, by the way. Look at that Fibonacci CC top here. Yeah, this is just a reminder that, by the way, if you are in Chart Champions, the merch store is now live. Scared, but look at this one. Scared money don't make money. I love it. You can see the football tops that we got going on. If you want a football top, we got the Chart Champions jerseys in football style. We got some real nice premium tops, swimming trunks, you name it. If you want the journal, you've got it within the merch store, Chart Champions. Anyway, so nice to see people sporting that, and very happy. So, final things that I will say here before we end. Very nice volatility in altcoins. So if you are a little bit on the sidelines, you're not comfortable right now trading Bitcoin, well, the altcoins, I truly believe, have a lot of opportunities right now. A lot of opportunities indeed. So if you want me to make an altcoin video, smash that like button. Smash that like button. I'll always say, hit that 5,000 target. This video will get over 10,000 views. So if just 50% of the people like this, I'll bring you a nice altcoin video. And trust me, the altcoins right now have a lot of opportunity, so it won't be a bad idea. And on top of that, anything that I wanted to mention? No, I wouldn't say so, to be honest. Just, recognizing the previous fake out that we saw of this local price action. If we get the reclaim, then of course we can look for that strong continuation. That would be, of course, never going to complain about strong continuation. Of course, if we get the fake out, then that's a different story, and we can trade it much like we did at $116,000 Bitcoin. And the local, again, not picture perfect, but very nice type of ascending triangle formation going on that failed auction. So I think right now we can approach this in a very neutral bias. There's no need to be ultra bullish or ultra bearish. There is setups to be had around this zone, both short trade opportunities and of course long trade opportunities. So there's a lot of opportunity, and you just have to approach it in this unbiased mindset of just thinking to yourself, hey, I'm happy to trade both ways. All I care about is a high probability, nice trade setup. And well, that's what you learn. That's what we do at Chart Champions. So if you want more, you know where to get it. Chartchampions.com, literally for all of your trading needs. We are the home of trading. Thank you ever so much. Hope you've enjoyed. And that is me signing out. Thank you and goodbye.